All right, good morning, or good afternoon, actually. It's 12:30 on the East Coast. I'm in California. It's morning for me. But hello, everyone, and welcome to this week's live stream with myself, Greta Wall, and David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Today's live stream is going to be all about IWM and all of the other stuff happening in the market, but our topic is how Inner Circle nailed IWM. David, before we get into the discussion about IWM, how's your trading day going so far today?
Today we have no complaints. Really an excellent day. Didn't expect to be such a great day, but today's turned out to be special.
All right, great. All right, so how did Inner Circle nail IWM? David's been talking about the rotation into small caps for a long time now, but Monday was a great day. David nailed the bounce that we saw on Monday. As you can see here by the chart, he got into the stock right at the bottom yesterday morning around 10:09 Eastern time, sold on his way up and was down to a trailer by 1:34 p.m. Eastern. And you weren't just playing this in stock, you were also playing it in calls. You went long some calls on Friday, the August, I think the 16th, 225s and 230s.
Exactly.
Talk about what you saw in IWM yesterday morning that you said, this is my buy spot, and how you managed the trade.
Sure. There is nothing I like more in the business than being very bullish on a sector, an ETF, a stock, and getting a pullback and getting an opportunity to get aggressive. So after entering IWM at 201 via stock and calls, I'm really getting bullish as I saw a turn in the economy and some softness that I thought really would push the Fed to be more interest rate friendly. We had, as everyone knows, the largest run we've seen in IWM all year to 225, 226. And I actually hedged some of my calls up there and went short, just anticipating we would take a rest. It was the most overbought we've seen the small cap ETF in history. And then the key was to not lose track of it, right? And to not get all bearish and think, oh my God, that's it. Because there was a real thesis behind the move. And the thesis was we're going to get more interest rate cuts than some had priced in. So it all came down to the charts and to being patient enough to not being afraid of a pullback, but actually anticipating one and enjoying it and taking it as an opportunity. So from the minute the pullback always started, I said, listen, 217 is entirely a possibility. And on this pullback, if you're bullish, the worst case scenario to me and best case scenario in terms of entering will be at about 215. That was my opinion. That was also in front of where the 10-day is. So started that pullback pretty aggressively Friday, started to put on calls. And then yesterday, that pullback continued as we not only pulled back to the 8-day, but came as low as the 10-day, which was sitting at 214. I said, it is really time to get more aggressive here. And after trimming quite a bit, I got aggressive 215s with the stock. We had bought the calls on Friday, 225s in the low twos. And today, obviously, it's been a hell of a day for us. But really, the whole thesis was this is not a cute day trade. There's something changing in the economy. It happens to be about rates. This type of move, this type of breakout is not, in my opinion, a 1-2 day event like we saw. There's more to this, and it's a position to keep track of. And if you like to trade around a core, when you can get a $10 pullback and actually enter again, there's nothing better than that. So that was our theme, that was our thesis, and that was our focus. I've trimmed a lot now, but I have calls and stocks still.
As you were trading IWM last week, you were shorting the Qs at the same time as you were watching that rotation happen out of the big tech into the small caps. What about yesterday's move? Did you see that said, okay, this wasn't just a quick little rotation and now we're done. We're going to continue moving higher in small caps.
I can't pretend I saw something as much as my thesis. I didn't see anything to change it, meaning I did not think the economy was hot. I didn't see any hot inflationary numbers. And I saw a stock that was cooling off, but not bearish, meaning it was still far above the 21-day and in fact, still above the 10-day. So it was doing everything a bullish stock would do on a pullback. And to me, I don't like to buy highs. I like to buy a bullish chart on a pullback. And to me, IWM small caps represented the epitome of that. It was also day 3 of the pullback from highs. So we tend to move in 3s and 5s in this business. So it's just all kind of set up. And I said, if I'm right, if this is special, they're not going to It's not pulling back 15 points. That would mean something's wrong. This is about as good as it's going to get. So let me not be exact, because exact would be 214s where the 10-day is. So I got to own it here. And whenever I try and get too cute on a chart, I miss the whole trade.
I mean, based on that chart, you were pretty close to exact on the bottom there in IWM yesterday. It was a great call. For anyone who is with us live, just make sure if you have any questions for David to get them in the comments early here, so we can make sure to get to them before we wrap everything up here. All right, David, tonight is the night. Well, this afternoon is the afternoon. The beginning of Mag 7 earnings are today. Tesla is up after the close today. This is a look at the daily chart going back to the last earnings report. So this is what the stock has done leading into today's report. This screenshot was taken a little bit earlier this morning. You can see the 21-day is that orange line. The 50-day is way down there, the yellow line. Talk about Tesla. What's your thesis on the stock heading into this report? Are you playing the report with calls, puts? Let us know what you're doing.
So I think Tesla is all about narrative at the moment. What I mean is right now, the conversation is much more about the future than present. Present, it's a car company, and sales are down, margins are down, earnings are down, and they're down a great deal. But as we've seen from the recent move, which is to the tune of 70 some odd percent in a period of 3 months, that all came about because everyone was talking about robotaxi, robots, humanoids, I guess we say, power, right? And anything but car sales today. So if the narrative remains the same, I see upside. The chart is better than it's looked in a while, short and long term. And frankly, if the narrative can remain less about today and more about the future and taxi in, I guess the meeting's now October, and more about, he's claiming he will use robots within the Tesla business starting next year. So if this is all the case, the stock can continue higher. Now, there'll be people out there that say it's expensive. It makes no sense. It's a car company. It should trade at $50. I mean, that's always been the case. None of that is relevant to the path of the stock now. Right now, the people that own the stock that are bullish, and I'm kind of in Switzerland here. There are other stocks that I get behind. Right now, the narrative is, hey, the future is so big. We don't, like, I had a guy on Twitter, and I think he's out of his mind, honestly. But this is your bull case scenario. He wrote, people don't understand Tesla. Car sales will be 5% of their business in the future. The only problem is right now it's 82, 83%. But if the shareholders think that way, then the stock can go higher. So the chart's solid. People are talking less about car sales. Expectations are down. We all know that earnings, margins, and actual auto sales are down. So it sets up okay after that big rally to 270, 271, off 20 points. I'm a bit more bullish than bearish. Here's what I've done. I basically said, oh my God, what a great day for me in Amazon. Oh my God, what a great few days for me in IWM. Oh my God, even cannabis is going. Immunome's up. It's been an amazing few weeks, month, year. I threw some lottos there. I anticipate I lose all my money on them. I own the 265 calls that expire on Friday. I'll worry more about how to trade it after the print. I think that's when I'll have an edge, which I'm pretty active in the aftermarket. So I have some calls for spec going into the print. And at this moment, frankly, I think there'll probably be a zero, but at least I have a little skin in the game, but very minor.
That is, very true. When I'm listening into Inner Circle, after hours, when we have a print like this, you are very active in the after hours trading, and you're active in the room.
I mean, I could be shorting the stock aggressively in after hours if I think I have an edge and there's a reason to. So that's why I don't worry too much unless I think I truly have an edge and I feel that the direction of the stock, to some degree, I think I know ahead of time, which is rare, but it does.
What do you think it is about you as a trader that allows you to, because you really quickly can, get the feel on an earnings report and the reaction to that earnings report and what the stock's going to do, in those after hours moves, you're very quick on it. What do you think it is about you as a trader that gives you that skill?
I know the answer. Half of it is not impressive. It's age. It's knowing how these stocks trade after hours and understanding perception. And then the rest is preparation. What are expectations? Where's the focus on these numbers? Is it margins? Is it car sales? Is it power? on, say, a Tesla? Is it on Google less about search and more about cloud? Is it less about cloud and strictly on AI initiatives? And then if you can kind of narrow down what's going to make that stock tick or not tick, then you can kind of narrow down what number is going to make that stock move. And once you do that preparation work, it's kind of easier to make a decision. So that's what I tend to do, is basically have my game plan ahead of time. So if I see X, I knew to do Y. If I see Z, I knew to do A. Yeah, I'm going the other way in the alphabet, but you get the idea. So it's really by preparation ahead of time and just having a feel for how these stocks trade after hours. I do not suggest it for anyone that's new in this business. It'd be a fool's errand. It's kind of cowboy land for most.
But
for me, it's not. I
for
really,
those in the inner circle, they have your guidance, so that's helpful. Going back to the chart really quick, is, like I said, this is from the last earnings report, so you can see the stock has moved up quite a bit so far, removed from that 50-day and above the 21-day as well. Does this give you any pause on Tesla having room after the report because we're up so far into the print?
It tells me it could be a good print and not move enough for option buyers, right? That it could be one of these prints where I believe last I checked, it was $24 is expected. It could be a good number and up at 19 or 20. So it might be one of those prints where everything's fine. It starts to go up. Call buyers, put buyers, do not get paid. It's a seller's report. And over the next few days, we take out that 271 and go higher. So yes, after some recent outperformance, it's certainly a tougher print than would it be 30 points lower and no one expects anything. And all of a sudden he's first talking about robo-taxi and autonomous sales and robots, et cetera, et cetera. So yes, there's more pressure today than there would have been back when, I bought the stock at 189 less than 3 weeks ago. So yeah, there's more pressure now.
Totally. All right. The other Mag 7 name reporting this afternoon is Google Alphabet. This is also the chart going back to the last earnings report. So, we had that big gap up after the last earnings report, some consolidation, and then a pretty good move higher. 21-day is that purple line, and 50-day is the orange line. So we're right between the two of them. What are your thoughts on Google heading into this report? What's the focus for analysts, and what are you focused on yourself?
Sure. I think the cost-cutting measures match up with the amount of money they're spending on AI. In other words, is it just spend, and no return right now? Or is there some short-term monetization that can keep this a reasonable value type of equity? And if that's the case, and there's like any form of monetization when it comes to AI versus the spend on AI, I think that works. I think cloud's huge. As long as YouTube is still hitting, as long as search, they're not losing huge market share, I think it all works. It's not an egregious valuation. It seems like a stock, given the environment, given that it seems like advertising's holding up, that can work. I'm not up here super bullish, but I'm more bullish than bearish on the print. I actually bought some calls yesterday anticipating we might run up into the print. They went from like 250 to, 290. I sold a few, and I'll hold a few for the print, but again, more lotto. Tonight's earnings, there's nothing I'm really bullish on. They're both okay. The chart set up okay. Neither I'm particularly bearish on, specifically with Google, given its valuation is much more realistic than a Tesla, given that they do have a lot of different universes they play in that all seem to be going okay. I'm willing to do it. I really think YouTube's holding up. I think cloud should be pretty strong. And I think it feels like they're no longer behind in AI, but starting to actually do some of the right stuff and not tell you like the first president was, Jesse Jackson. Their AI initiatives in the beginning were totally insane. So it just feels like the narrative's changed. And I kind of like it. I love to like step in front of things and take some risk and give the viewers like something exciting, but neither of tonight's prints are very exciting to me, either side. I don't feel I have a huge edge, but I will pay attention most of all to how the street responds. Does a great number get sold? Remember Taiwan Semi? That was our tell that Qs and NASDAQ would have a pullback because they had a pretty strong report in all facets of the report. And yet the stock was up $1.50, $2. And I told Inner Circle, we're going lower. If that's all it can do after being down 16 the day before, that's all you need to know. That gives you a whole lot of evidence we're going lower in the market. So I think tonight, more than anything, how they respond to good or bad numbers is going to tell you everything you need to know.
I think that's a really important point. These big mega cap companies can be such a tell for the rest of the market, not just
1000%.
their
Whether
stock.
you're in Google, or it almost doesn't matter, because it's going to tell you a lot about maybe Amazon. It's going to tell you a lot about cloud spending. It's going to tell you about ad rates, and maybe a little bit about Meta, maybe a little bit about Snap. So that's what's important to me this evening. The overall dynamic of, hey, do car sales suck? Are they as bad as we think? Are margins holding up? Like, is this humanoid robot thing like something that he can tell us in a less insane way? In other words, he can, in a very calm, concrete manner, say, this is expected next year, and I may actually monetize it and the street doesn't understand it. That I'm looking for some of that sort of stuff to see where it matters.
Mm-hmm. Your favorite Mag 7 stock, you've been very vocal about this, is of course Amazon. You told me before we got on the call you've been doing some trading in Amazon today. Their earnings report is a little over a week away. Talk about what you're currently doing with Amazon and how maybe the beginning of these Mag 7 reports might be a foreshadowing for Amazon's report next week.
So my two have always been all year, NVIDIA and Amazon, at the right price. Last week, I was a big buyer of NVIDIA, 117, but I think in this market, you have to be picky. So here it's whatever. But last week, that was my favorite Mag 7 name. Then this week, Amazon's it's been down I don't know, 10 out of 12 days. And it went on a horrible run last night. There was more news that Mr. Bezos can't finish selling. He's having a tough time. I think he's broke now, or he has to raise more capital, so he has to do more selling. But seriously, it's just it's been a disaster in terms of how much Bezos wants to sell. Today, for whatever reason, one analyst got behind it. I guess it was a little exhausted of all the selling, and it ripped. My most recent entry of stock and calls was at 184 a couple days ago. Today at 187, 188, I trimmed some stock, and I trimmed I have the 195 calls for earnings. I will remain with some stock and calls for earnings, but today I was up, had a fair amount of profits on both my stock and calls, so I trimmed some, because there's nothing better to me than getting a nice pop in front of a big binary event, being able to take some profits and play with the house's money to some degree. So that's what I'm doing. But if there's a setup that I like more, and let's just pretend that Jeff Bezos isn't broke and doesn't have a bunch of yachts and doesn't need money for whatever reason and doesn't play in space and doesn't need capital. You get the whole joke. But anyway, let's pretend he's not doing a whole lot of selling. This stock has still barely done anything over the past 3 years. Going back to COVID, it did, and now it is just simply hanging around at previous highs, which were 188. Then we got above 188, and then we went to 200. Well, right now, Amazon is all of 187.73. So basically, we've done absolutely nothing, yet they produce more cash flow than they ever have in history. It looks like Amazon Prime, their 2-day event, was as big as ever and set many records. AWS seems to be quite strong, and I think will continue to be. They have an advertising business that is bigger than almost anyone's and is not talked about enough. So if there is something from a numbers and success standpoint, after selling warehouses, planes, and cutting back staff, that is lean and mean and can produce some upside, it's Amazon. It would be nice if Jeff Bezos let the stock breathe on top of it when it gets over 200, but that I have no control over. So down here, I'm much more bullish than the rest into the print.
All right, great. All right, David, I want to get your thoughts on the new Ether ETFs that started trading today. We have funds from BlackRock, Fidelity, Grayscale, and more that started trading today. These are similar to the Bitcoin ETFs that launched earlier this year. Give me your thoughts on what this means for the market, the crypto space overall, getting this kind of exposure for stock traders.
I'm more of a Bitcoin guy because I'm a simpleton and not that smart to know which crypto to own, but I do own IBIT for Bitcoin. And my thought is pretty simple. The more access you give the general public to whatever crypto it is, in this case, Ethereum, which has always been second best. And in some bright minds, they say it's first and that it's more of a buy than Bitcoin. I don't know enough to suggest they're right or wrong, but here's what I know. The more access you give institutions, the easier you make it, the more bullish it is. So it certainly is not a negative. It is only a positive to the longer term future of Ethereum.
All right. Yes. And I mean, if we're thinking back to the Bitcoin ETFs and the launch and the impact, that's definitely what you would expect. I wanted to get your thoughts on the market impact of the recent political turmoil that we are going through. There is no shortage of it over the past week. It feels like we've lived 2 years of election news. The shooting of Donald Trump, now the dropping out of Joe Biden from the race, Kamala Harris being the presumptive now Democratic nominee. What do you see? What are you expecting in the market in the next few months? We have 3 months to go until the election, a little less than 3 months to go until the election. So what are your expectations over these next 3 months? Historically, we kind of get kind of a lull heading into election day in the market, but do you think this might be different?
So I think there'll be some headline trading, but overall, I think the market, Cramer's really gone out in front and tried to really paint a specific picture of basically our present red ticket not being as bullish for the market as most people think. And Vance specifically being added means that when you're so pro-USA and all about tariffs and so on, that it may not really benefit big cap tech. And in that case, maybe they would unwind some of the Trump trade, which has, by the way, been small caps and less international exposure. So here's what I'm saying. Well, right now, we have actually the market up. And we specifically, not the market, but NASDAQ earlier today and the Dow was up. And more specifically, here's what I'm getting at. We have small caps up today. Based on what Cramer's saying, a Trump ticket benefits small caps more, less international exposure. But if you look, and this is why I'm telling you not to pay much attention to this kind of all this messy news. Right now, according to all those political surveys, Kamala's actual chances have gone up slightly, ever so slightly, which should have small caps down. But small caps are actually higher because housing is slowing, because most of the economic, what did we get today? Michigan report, or I forget what city, but you get the idea. Right now, the economy's slowing down, earnings, this is what matters to the path of the market. And if we try and figure out, is it Kamala? Is it Trump? I think you can trade yourself till you're dizzy, We all know that right now the odds are that Trump wins. Over time, will the market get behind different theories like Trump's better for healthcare and Trump's less positive for things like solar? Sure. And would Harris be better for that, opposite side? Sure. But I don't know if there's enough to trade on. And I think if you do, you're going to just mess up. I think you're better off buying Google if they have great numbers when the stock pulls back after running too much, or focusing on small caps because we have an economy that is slowing down and we're liable to have more than one rate cut this year. That's otherwise you're just going to get yourself dizzy. So I'm not going to trade headlines and who's winning too much. Right now, we know there's strong odds of former President Donald Trump. Will that change? I guess it can. Right now, I doubt it will, but it can. Who knows? Maybe their debate will go much better for Kamala than past debates for other Democrats.
Mm-hmm. When it comes to IWM, you said you've been trading around your thesis, the rotation, and are you still expecting the same kind of moves? Where are you on that thesis now with the future of IWM from here?
We get a soft PCE Friday. I think we take out that recent high up at 225, 226, and I think the new level is going to be up at 230. This is a very strong move. It's a breakout that's been building for years. It took a long time to get there. There are a lot of people who've been sucking wind with small caps for 6-7 months. So there's a lot behind this move. And I think another light, important number, one that some people suggest is the most important Fed number that they pay attention to PCE more than anything when it comes to rate cuts. I think maybe it's not as simple as that anymore, that a lot of it's the jobs market. But bottom line, it's very relevant, soft number. we can take out recent highs or at least test them. Ultimately, you have guys like Tom Lee who are much brighter than myself who are calling for a move to 300 by the end of the summer, or in total a 40% move. I'll be very happy at 240. That's what I'm looking at over the near term. We'll worry about 300 and all that down the road. If it's 240, I think a couple people will name their children after me and thank me enough. So I'll worry about 300 after. Let's get through 225 to get to that next level, 230. My target's always been 232 and 240, 244. We'll worry about the rest after.
All right. And then you and I previewed, of course, the big ones, the Tesla and Google reports tonight. But what other earnings are you focused on as a trader this week?
Most definitely Amazon. Tonight, there's an outlier. It's an end phase. The sector has been beaten like a stepchild, and the news flow is ugly. But the company is actually showing growth, or at least analysts expect growth next year of upwards of 80%. So if you look at it on forward earnings and growth, it actually can be like the dark horse of the space and have a lot of upside. Odds are against it, and the sector hasn't bottomed, and they haven't bottomed. But if there's something I'm paying attention to that can go up 20%, and then another 20%, and then another 20%, that really is ugly. It's end phase. So I'm paying attention there. I'm paying attention to Snap in the coming earnings season because they had their first good quarter in a long time. I told you about Amazon. The narrative on Apple is better. People are even talking about an uptick in phone sales because, of course, they're talking about AI pushing that idea, and that this next cycle, right, this next upgrade cycle will be bigger than ever. And then there's news today about them doing a flip phone, and I missed my StarTAC for Motorola, so that would be cool. So I'm paying attention to Apple. A lot of it is because it's missed a lot of the bull market, so there could be more upside. I wouldn't be shocked if this stock was 250. So I'm looking at a lot of those plays and more, so I'm sure we'll talk about it next week. But this week, end phase would be the other one I'm adding. Texas Instruments matters. KLA might be most important because it'll tell us a lot about semiconductors, and NXPI wasn't so hot last night. So I think a lot of people are going to look at KLA to tell us a little bit about NVIDIA and AMD because they are one of the most important equipment manufacturers in semiconductors.
All right, great. All right, so for anyone who is interested in working with David, you can go to t3live.com/DP. Again, that's t3live.com/DP to apply for the Inner Circle. It's a screenshot from the room from last week, just some of the feedback that David's getting on a daily basis from members in the room. We do these things here weekly, but David is giving his ideas to the room in real time as he is trading every single day. With that, I'll let you get back to trading, David, get back to the room, and we'll talk next week. Thanks again for doing this, and I'll see you.
Thank you. Have a great day, guys. Take care.
You too.